Okay, well, let's get a technical perspective, right? I mean, we are at all-time highs, almost there. But how's market looking? Is it good for more, or there will be some hesitation, some consolidation? Atul Suri is with us, Chief Executive Officer at Marathon Trends-PMS. He's with us here in our studios as always. Atul, good to have you with us here. Thanks very much.
Thanks.
So you heard the question. What from here, basically?
See, I think, Prashant, it's just global in nature. It's not just that India is doing well. If you look at global markets, there's a massive repair job, and we've been talking about it. Yeah. I mean, a lot of markets are almost breaking out of 52-week highs. Look at NASDAQ, that's driving. S&P 500, that's going there. Japan, doing pretty good. KOSPI, Taiwan. So there is a whole host of markets, and this is a repair of the damage done last year. And this is global in nature, barring a few countries like Russia, etc. But this is global in nature. So India also is getting to new highs. The difference is that it's not just 52-week highs, they are lifetime highs.
Correct.
And that is a very, very big difference, because even if these markets are breaking out of 52-week high, they are good 10 to 15% from lifetime highs. So that really sort of reiterates the position of leadership that India has. You know, we had this feeling of outperformance very early in the year, but then after that, due to some events, the luster was lost. But the good part is that India has recovered, and it will again be one of the first few markets to break out to lifetime highs. And there's a lot of difference between lifetime highs and 52-week highs. Lifetime highs means that there are no resistances, there are blue skies. So I think that India is getting there, and I still feel that we have about a good 15% upside from where we are. Oh, wow. And I think that, you know, a lot of people are sitting in cash, and I've been saying that for quite some time, that please be invested, top up if you have to, because I think that this is a global repair that's happening in equities after a big pain last year.
A lot of people one speaks to are still in a state of, I mean,
absolute.
A bit of a disbelief, right?
Yes.
Markets don't top out when
you're in that kind of a state. I mean, famous line by Soros, you know, bull markets are built on walls of worries. And that is very, very true. And see, where is the froth here? Where are the excesses happening? There are no excesses. You know, do we have that GameStop kind of scene last year? Do we have those SPAC kind of situations? We don't have any of those
Maybe
kind of
single stocks in mid caps and small caps, but that always happens, and then they get corrected themselves. I mean,
there are a lot of people who you know, for whom that is their profession and their bread and butter, but it's not the market as a whole. And that is why you'll find that the angst was a month ago was, hey, you know, this is just very limited to few stocks, few sectors driving. Hey, but look at today or look at last week. The breadth is really improving, and that's, I think, very important. So no euphoria is actually good. But personally, I'm extremely bullish, and I think that India has really, really, you know, pounded up on the table and said, hey, this is leadership status. So as an investor in India, why should you not be in equities?
Okay, that is the most bullish I've heard you in a while, actually.
No, I've always been.
More bullish than last time you came here.
Okay,
what has changed since then? You changed your diet or something?
No.
But 15% upside is big, right? Given the rally that we've seen up until now.
Sonia, I've been saying that, I mean, not that I just don't want to talk about the past, but, you know, like I said, 21,500. I've been on record saying that since, and it got a little messy post that whole Adani issue, etc. But I think that India is heading there, and we are showing absolute character, breadth, leadership, all these things are there. So I, for one, have fully invested. I mean, I don't even have 1% cash. Let's be honest.
And where are the leaders now? I mean, traditionally, it's always been banks so far, right? IT has been underperforming.
Absolutely.
Do you think things could change?
No. So what we did was we realized that, hey, you know what? The sector indices that are constructed are very poor.
Yeah.
I'll give you an example. The best performing theme playing out today is defense. Right? But we don't have a sector. It is somewhere in the PSU basket. Yeah. So what we did was we created about 40 thematic sector indexes. So clearly there are 4 or 5 very big themes playing out in this market. Why I point out defense is that defense is not just doing well this year, it was also one of the best performing last year. Yeah. And the numbers are supporting it. So what you see, I mean, as a trend follower, there is a very, very big play happening in defense stocks. Second is not a very glamorous sector. It's your electrical equipments. Again, cap goods is a very big universe. But if you look at some of the electric equipment manufacturers, you'll find they're coming out with very good numbers. What has happened is that over the last 8 to 10 years, a lot of companies in these sectors have been wiped out. And what is left is a handful of them. So when the government orders are coming, the push on infra is coming, you'll find that these guys are disproportionate beneficiaries. They are all screaming away at lifetime highs. Similarly, you'll find in construction, infra, they have not moved for a decade. Yep. They are under-owned, under-loved. So these actually become very good themes for larger trends. And that's why we personally prefer to be overweight here. Those which were leaders 2 years, 3 years, they are famous names, they are marquee names, they're so-called quality. But you'll find that they don't have trends right now. The trends have moved. Hotel stocks. That's another very, very interesting place. I mean, when did hotels take leadership status? Even in auto, I think auto is a very interesting sector. But more interesting is the whole ancillary space, where there are some of the electric plays that are playing out. So to thematically look at the market, I feel that there's immense leadership. You will notice it in breadth. It may not get reflected in the index per se, but there is a lot of trends playing out.
There's a party going on in the broader markets, Atul, and if you're participating, good on you. And as you're saying that you're not sitting on any cash, so fully invested. Just want a time frame. This 21,500. I mean, how long could it take?
I think the markets will surprise on the upside, because I think globally, I feel that markets will surprise, and I wouldn't be surprised by the end of this calendar year. So that's just 6 months, which is very big, because the big issue that is happening, what I am really seeing is the cooling off of commodities. See, our biggest beg, but last year, what was the problem last year? If you find that all asset classes were negative in 22, except one, commodities. And 23 is just the opposite. All asset classes, whether it is equities, whether it is bond prices, whether it is even cryptos, there's only one asset class that's negative, and that is commodities.
So let's talk more about commodities. Crude prices, where is it headed?
I think they are headed much, much lower. And I think that crude actually is one of the most manipulated assets in the world. It is a pure political play, a play of egos. And crude, in spite of all attempts by Saudi, if you look at it, they're doing everything. They're almost like a one-man show in OPEC Plus, trying everything to cut production unilaterally and go ahead.
Yeah.
But you will find that crude is still not going up. The day they do it, it goes up $5. But a week later, it makes a new low.
Yeah.
So essentially, this asset class is telling you it wants to go low. My target for crude is around 65. That's Brent crude. And I think that will have very, very wide reflection on world economics, because it has created chaos and mayhem. I mean, if you look at our neighbors, you look at Pakistan, Sri Lanka, a lot of African countries, these countries have been destabilized thanks to this crude prices. So I feel that commodities per se, which is one of the biggest cause of inflation, fear of inflation, which led to higher rates, which really created the mayhem in equities. I think if commodities remain cool, which I think they do, that's what they seem to me right now, I feel that this will be positive for equities and economies as a whole.
Atul, you mentioned electrical companies. We've got a company joining us in just a bit. KEI will be with us, and that'll be interesting.
Disclaimer, it's a part of my portfolio.
That's done phenomenally well, I mean, over a period of time.
You want to share some more portfolio?
No. Just that you said it. Better be safe.
We should have a tease up. So, I mean, what else? Real estate still looking...
Real estate, Prashant, has its bits and pieces. But at the end of the day, when I talk about trends, I'm talking about a 1, 2, 3 year kind of up move that there is happening. So real estate has been very good, probably the best performing in the last 3 months. But by my standards of qualification, it's still not there. Like I am extremely overweight defense, electrical equipments, engineering, infra plays. I know these are the areas that I am, because what we call the old economy. As I said, it is perfect setup. You don't do anything for a decade. You're under-owned. Even at the corporate level, very few players. My models are telling me that, hey, you know what? That the whole cycle is turning, the whole infra, the whole capex circle. I'm not an economist, but we have to hear what our models tell us. My models are clearly telling me that things are turning around in this place. And if they do, I feel that these guys are going to be disproportionate beneficiaries. And it's showing in the quarterly numbers to confirm. It's not just storytelling.
I know you have been a big bull on autos for a very long time. It's played out beautifully, right? But what next? Is there more upsides in the auto stocks? Or have people missed out on the rally?
Yeah, and even in that, Sonia, as I was telling Prashant, that autos is one. We know these famous 5, 7, 10 names. But look at ancillaries. Yeah. I think ancillaries is a very exciting place. You know why? Because of the electric focus. Yeah. Whichever, even if you see some of the companies, you mentioned some, like these are part of our portfolio, because we find that wherever there is an electric slant or a move towards electric mobility, I think that is doing very well. So auto ancillaries is a very big basket, maybe a few hundred stocks. You can't have that. But even in that, look at the electric angle. I think that theme is playing out, and not just India. Again, it's happening globally.
So you're not looking at the auto OEMs. You feel that that's an overcrowded trade now?
I feel so.
M&Ms,
and I think
Tata Motors of the world?
Yeah, I mean, they will do well. But at the end of the day, my job is to create alpha. And, to look for that alpha, I would look at those niches or those specific trends. As I said, there are a few hundred stocks. At the end of the day, how many auto stocks can I have? So I would rather go into ancillaries, and in ancillaries also, I would look at the electric side of it. I think that you can see it. The market, the screen is telling you that they're doing very, very well.
And Atul, what about the IT index? The IT stocks, they've been fairly stable. They're not corrected much.
In fact, they've been disastrous. The large cap IT is one of the biggest drags on the Nifty.
Yeah, they haven't moved much is what I meant. And Nasdaq is up close to 30%, in the recent past. What's the view out there? If they've been disastrous, do you see some downside risk on the IT stocks? Because that's a large part of the index, the Nifty.
Yeah, they have been one of the biggest drags. Because if you look at banking, which is in sector number one, is almost at lifetime highs.
Yeah.
It's pretty much keeping in step with the market as a whole.
True.
But IT large cap is actually one of the biggest drags on the market. And even when you look at Nasdaq, you'll realize that, hey, it's not the breadth in the Nasdaq that's playing out. It is, again, just as I mentioned, electric and autos.
The top 6.
In tech also, it is AI.
Yeah.
Right? So even in the Indian market, you'll find that there are some companies, some mid-caps doing very, very well.
Yeah.
So you really have to, as I said, look at themes that are playing out. And once you get these themes, I think that's when the big trends play out. So even in tech, it's the whole AI thing that is really playing out. And that's changing lives very, very fast.
Okay, forget all this. It's season time. Where are you traveling now?
Oh, okay. Yeah, this time I'm doing something adventure. I'm going to Ladakh, actually. I'm going to hike. I'm going to Ladakh. So that's going to be a 9-day trek.
Is it your first time in Ladakh?
Yeah, absolutely. So, we are a largish group, and I'm the kind of organizer. So that increases the pressure.
I was reading somewhere that they're actually now opening places which were inaccessible.
Yes, the China border, because north of Pangong was actually restricted area, and that's when the China border. So now they've started tourists to go north of Pangong. Right. Pangong, of course, is that very famous, beautiful lake. Must do photo op kind of things. I think Three Idiots was the movie where, that's what made it famous. But north of Pangong was restricted because that's when.
All right.
Okay.
Have a fantastic holiday.
Have a safe one, actually.
Oh, yeah, I know.
That will be a tough one for you.
Fingers crossed.
Thanks very much, Atul.
Thanks a lot.
That's technicals, 15% more to go as far as the Nifty is concerned. And, broader markets and these specific sectors is what you need to be focused on, as Atul explained.